House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm joined by Derek Hamill, Research and Communications for Zimtu Capital. Welcome, Derek. Great to have you here.
Welcome. Thank you.
Now, Derek, you've expressed earlier in the year some optimism for the venture exchange. Where does that stand right now, and how are you feeling about the venture?
Yeah, so about 6 months ago, I made a call that we were going to slowly grind higher, as I put it. And we were on trend for that up until September. So what that kind of indicates to me is that there's just an increase in volatility, maybe some concern out there with global affairs, so Ukraine crisis, Chinese slowdown. Yeah, a lot of headline risk. But the fundamental story still is sound, which is normalization of U.S. growth. China still growing, albeit slower, but they are going higher. The European crisis has at least stalled, so now it's, we'll see maybe a grind higher over there. So there's some factors that are long-term still pushing the market, so it may have delayed it for a slightly longer time period, but
okay.
Yeah.
So it's just taking a pause, but you're still as optimistic about the venture exchange.
Yes, exactly.
And what's your outlook for the overall markets?
As I say, I think what's really hit the venture is that it's really exposed to oil and gas and, of course, mining.
Right.
So those are your two factors there. The big board has had, a lot of financial services involved. So you've got the big banks, you've got utilities, you've got pipelines. So they've been able to kind of weather the storm a little bit more. That being said, I really see a turn in a lot of the commodities themselves, especially in mining, just because they've been so distraught for many years now, going on 3 years. So I really see that as a turning point.
It's been a distressed market, and so the valuations right now are probably looking more and more exciting. And
I think people were too optimistic in the beginning when quantitative easing had happened. You had zero rates, and people were going, okay, there's going to be a lot of money, maybe they'll go into commodities. But actually several studies, one from Societe Generale out of Europe and another one from O'Neill and Company in the US, looked at stock returns, and they said actually when rates start to rise and normalize, that's generally when you get outperformance of your materials and energy sector.
Right,
so,
right.
And
a lot of people are expecting that rates are going to, there's going to be a rate hike coming.
Exactly. I mean, it'll be slow, but that's actually what you want. You want to form a base, you want to slow grind higher, you don't want spikes like you had in 2007, because that really just leads to unrealistic expectations.
So we touched on China a little bit there. So you're saying there's slowing growth, but no signs of really stopping anytime soon.
No. Obviously, it's going to be a bit of a transition. The government has said that they're transitioning to more of an internal consumer economy. They had to do that. Right. They can't just keep producing goods for the Americans and other countries to buy. So,
how far off is that?
That's going to be a decade-long transition. That being said, you look at China, 52% urbanization. It's expected to be 60% by 2020. That's 110 million people moving into...
It's a huge migration.
Yeah. So that's, a country that's basically a third of the U.S. population being in urbanization, going to consume goods and commodities. So I really see that as a stepping stone forward. And also we have to realize that when we grow like the West, we already have our infrastructure in place. We might consume a new iPhone, but we don't, we're not making the first jump, which is agriculture to more industrial based.
Everyone there is going to need their own car. Everyone there is going to need all these materials that, like you're saying, we already have here. But some people are buying their car for the very first time.
Exactly.
Yeah. Taking their first European vacation.
There you go.
Yeah. So there's a lot of growth happening. Now let's talk about commodity prices. What commodities are you focused on?
Zimtu Capital is a broad-based project generator, and we can get into that if you want, but essentially we're exposed to pretty much every commodity, so we have to, not only are we exposed to a certain project, but we have to watch the market as a whole. And what we've seen lately is, across the board from industrials to base metals, except for zinc, this kind of price move down. And there's some factors on different commodities of why that's happened. but I think you look at copper as one of the main ones there in the base industrial.
What do you see happening for copper?
Well, long term, it's growing higher. It's around $3 right now, but you look at, as I say, the Chinese growth story, and that's not even considering, there's a bit of a misnomer there when we talk about BRICS, because it's really just been China's growth. India's grown, there's a lot of people there, but it's been very anemic and actually underperformed.
Right.
So if that ever turns around,
there's a major lack of infrastructure in
exactly.
India as well.
There's some real reasons why they're not growing the same way as the Chinese are, but there is that potential there.
What about Russia?
Russia's a weird case, and I mean, there's PhDs that make their thesis on what the Kremlin thinks day to day. It's a funny situation. I think actually Russia helps in some ways from a regional standpoint. If you're going to develop a large deposit, where do you want that deposit to be? Right. And I think for a lot of the early part of this decade, people didn't care. They thought the world was stable, safe. There's been some flashpoints, but generally everything was good. Now I think you got that risk coming back in that you want to
kind of shake the market up.
Exactly.
Now, what do you see happening in the Canadian uranium space? Do you follow uranium?
I do. I follow uranium. If you're going to invest in uranium, I think the Athabasca Basin is the only place I would actually invest in the current market conditions. So a few months ago, I wrote about the Japanese reactor restarts, and we tried to model how many reactors are going to restart, 'cause that's a big question, obviously, in that space. And you have guys like Cameco saying 40 to 45 of the reactors will restart. I don't see that. I think there's going to be some major hurdles to overcome, but I could see 20 to 28 reactors starting. Okay. So that's going to be about 10 million pounds of uranium, which is going to help. But the U.S. is pulling back. They cannot build a reactor. Some of them are getting older, so that's going to be kind of a cross-balance act between the two. So I don't see prices spiking anytime soon.
Okay.
It's not.
So is it a good contrarian play right now?
Yes. Again, the reason the Athabasca Basin is the best is high grade. It's extremely high grade. It's in Saskatchewan, a very good climate for mining. We've got the geotechnical expertise. We have infrastructure here. So there's a lot of real good, solid advantages to being in this part of the world. So again, if you look at what's happening in the world there, I mean, there's some African operations that are closing, but Cameco is still profitable.
Right.
And we'll see what their cash costs settle out to. But when we talk about some of their projects, their cash costs are coming in at $16, $18. So they're still making really good money, and that's the beauty of that part of the world.
Excellent. Great. Well, Derek, thank you so much for joining us today. It was a pleasure having you on.
Thank you.